Good afternoon, everybody. How is everyone here today? Who remembers the sound of my voice? Quick audio visual check. Can you see a screen that says TachEon Warp and hear the golden dulcet tones of my genius vocal cords? Everything I say that comes out from my lungs uttered into the universe, entertaining, educating, and enlightening all those around us. It's good to see you. Welcome, welcome, welcome. I am excited to be here. My name is Michael. I'm the founder and one of the two partners here at Back to the Future Trading. You may have seen me or heard me in some of our other YouTube videos, gotten emails from me. And let me just say it's an honor and a privilege to be here. I will hopefully make the most of our time this afternoon, give you a little bit of information of what we're about, how we work. I'm going to do some light teaching this morning and introduce you to a very close friend of mine, a man named Jacob, who started out exactly where you're sitting right now, in an office, in a chair, watching a webinar just like this one. And Jacob is going to let us know what his experiences have been like using the tools and the techniques that we're going to go over here today, and give us an update on his trading with the tools. So quite an action-packed afternoon here. Just want to start out by saying, in essence, in a very short blurb, we believe markets have two axes associated with them, a price axis and a time axis. And I believe we're one of the only, if not the only company in the world focusing on the time axis. We're so confident in our timing signals that we give out the times and directions before the markets on Wednesday and Thursday every week. And then we come back here every Thursday to see what actually happened at the signals. And so we're going to look at a couple of examples of that process, talk about how that worked, and summarize if this tool was worth your consideration or not. There's a few of you in here today that have been around in the past. Just want to say a special hello to those of you that are nearest and dearest to my heart. Earl. Yo, Earl. Dorian, good to see you. Barry, welcome. John, Lilburn, Luke, Mr. Embry, welcome. Mike, Mr. Watkins, Richard, Yusuf, what's going on, brother? Tom, good to see you. Mr. Murphy, Barry, hey, how are you? Mr. Camacho, welcome on board. I saw you got together with Dave last night. Welcome to our family. Jerry, you're still alive? Jerry, I ain't dead yet. Guzner, good to see you. Another day above ground, man. It's a pleasure to have you guys here. If I forgot to mention your name, I just want to keep it tight. But it's definitely an honor and a privilege to be here today. We believe the markets are not random. That, in fact, much of what plays out is either coordinated by large institutional traders in advance and designed to trip up retail traders at stop runs and the like. Or if you want to get really metaphysical with things, we believe that much of what's playing out in the worlds and in the markets is a form of predestination. Going all the way back 150 plus years, traders like W.D. Gann going so far to say that we're all just sort of actors and actresses in a script that was written before time. And so that's where we sort of try to tap into this big chaotic data ball and see, are there any patterns with regards to the timing dimension? And one of the ways that we accomplish that, as I mentioned earlier today, is by giving out the times a couple days in advance before the webinar. to see if in fact we can predict movements before they occur. So many of you found out about us and started following these forecasts, just like others of you that have purchased the software. And if you're following along at home, I'm going to go ahead and paste a copy of that link in your GoToWebinar chat. It's backtothefuturetrading.com/warp-webinar-forecasts, highlighted up here if you needed to see that. And what's really cool about it is we can produce these maps that have predictive times associated with them. So for example, for Wednesday, November 9th, the E-mini S&P on a 3-minute chart, the software had concluded that there were some high probability times based on recurring movements in the past. And it alerted us to those times before the market opened on Wednesday, before the market opened on Thursday for Thursday. What does that mean? Well, I want you to imagine for a second that, let's say on the E-mini S&P, the market went up from 10 o'clock to 11 o'clock, not once, not twice, 3 or 4 or 5 or 6 times in a row. But let's say, Fred, it went up 20 days in a row. As soon as the clock struck 10 o'clock, bong, the ES starts to rise uncontrollably for 60 minutes straight. If you knew that, if you understood that about the market, what would you do tomorrow? How would you trade tomorrow? Well, if you'd seen that 20 days in a row, my guess is at 9:59, you would hit the buy button. Is that a logical assertion in my hypothetical example? 20 days in a row, 10 o'clock, boop, 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 for 60 minutes straight. Well, I've given you a peek into how the software works. And when we get a map like this, it's not, of course, that acute of a data stream, meaning it's not 10 o'clock for 20 days straight. However, any of the times that we see appearing on the output of this software, which works for futures, forex, crypto, equities, any of these times are here because in the very recent past, movements have been occurring at those times with higher than average frequency. They stood out. When the software did an audit of the movements of this market lately, these times kept coming back as having statistical significance. Maybe not 20 days in a row every day, but enough times where an unbiased, unemotional algorithm said, hey, Michael, you may want to pay attention on Wednesday at those times. And so when we come out after the fact and we look at what happened at those times, some pretty interesting things start to occur. So these were those very same times that we were just looking at on that timing map for Thursday. This is the E-mini S&P 3-minute chart from 8 o'clock Eastern until the close. And one of the things that we start to notice when we get a little deeper is there's some weirdness here, meaning the market actually did go up at 7:54. And it went up and stopped going up until 8:09, where it proceeded to fall. We were looking for an up move at 11:18, a down move at 11:45, an up move at 12:39, a down move at 1 o'clock, an up move at 1:42, and then a down move at 2:24, down into 3:30. Interesting. Huh. That seems like a little more than half of the times did exactly what was expected at those times. Fascinating. Now, in your handout section, in the past, I've given out a guidebook that demonstrates some things that can happen at some of the times on the chart. For example, and the software is going to show this to us. Sometimes when we arrive at a selling pressure signal, it reverses and goes in the complete opposite direction. And so I want you to look with me real quick at 1057. So right here at 1057, Yusuf, can you see how that's the lowest low in relation to the prior swing low? So I'm going to circle two things: previous swing low, new lower low, and the move goes up. Dorian, can you see that? John, Luke, how the two things are sort of identical to each other? Well, when you turn the advanced patterning on for the software, guess what? It would have caught that too. And so now, where I didn't have an arrow here, I can put an arrow here. And I have a pattern 4 there. So all these wonderful things are happening at these key times in the markets that we're following and trading. One of the markets that we followed today was crude futures. All right, a lot of you are trading oil and tracking those signals. Let me get rid of my scribbles on here. Erase all those drawings. And when we come back and look at oil futures over a large enough span of time, here's the European market and the US market for today. We start to see that same pattern taking place. That is to say, a lot of the times, more than half of the time, the signals that we were expecting to see at these times are actually producing moves. Many times big moves, a lot of times smaller retracements, but a lot of the signals are marking actual highs and actual lows, including the last signal here at 351. Right? And as we go back in time over a broad enough period of days, we'll see those signals again are appearing near actual market highs and lows over and over and over again. And so, Yusuf, when we're arriving at these times, there's an expectation that someone has their fingers in the cookie jar. And if we wait, they might just do it again. So in a way, we're exposing the algorithms that continuously trap you in the stop runs. We're exposing the prop firms and institutional trading desks that lure you into these positions that immediately go against you. And so as we look across a wide diversity of market signals, we can see here that in a market like the Dow futures, for example, as we go into the afternoon, we start to see that even with some of our big reports across 2 different days, we have signals that were moving down, for example, in the Dow, and then signals that were moving up when the trend was up in a complete different direction. And these can give you a signal to go long if the trend is up, for example, at 857 and 957, 1139, 1236, 154, and 312. Right? We can have a heads up and then also see the signals that are coming in the future. My favorite, one of the markets I love to watch, is the E-mini NASDAQ. And when we get to the NQ, it's particularly interesting to me. Let me reload this chart. Because just before the Consumer Price Index report, we had across almost every one of the index instruments that we were following a buying pressure signal. So those of you who trade options can use a tool like this to let you know what window of time you can expect to see a move in a certain direction. And about 60 to 70% of the time, that move actually occurs. So we're waiting from 818 until 839. And then selling pressure or profit taking from 839 until 855. and so on. So we can use the timing signals to help us know and give us a direction at a specific time. I also in the email sent you a short description of a trading system, a system that we can use to trade these signals. And in this case, I do have my 120 exponential moving average. We can enter at the close of the signals in the direction of the trend, like 855, and we can exit by the opposite signal. And if I keep track of those things, not only can we use the times to know what direction to look for signals, but we can build a trading system around them. And Jacob is going to share how he trades the signals with you guys in a second and show you a slightly more advanced setup than the one I'm describing to you. But if we just went long at the long signals in the direction of the trend and we got out by the opposite signal, you see that oftentimes, while we do have small losses, many of the times we can have large gains. And so in this case, from 8:55 until 11 o'clock, we have a $9 winner, a $7 winner, a $14 winner, a $15 loser, a $91 winner, and a 50-cent winner, just taking signals in the direction of the trend. And then if we look forward into the afternoon after lunchtime, you can start to see, as we're looking at the live signals here together, knowing what trend signals to take puts us in front of signals. This one narrowly misses its stop and finishes $6 ahead. The next one finishes $11 ahead. The next one finishes $4 ahead. This one finishes $13 ahead. And the very last one up until the close has a high spurt and then finishes basically break even. This is NQ on the 1 minute, correct? And so when we look at these signals, what's fascinating to me, and it should be especially fascinating to you, is that I gave you the signals for the NQ 1 minute chart 2 days ago on Wednesday morning. So 2 market sessions ago, all of the times that are on this chart are the times that we're referencing right here. 316, 330, 316, 330, 402, 402. All the times on this chart were given out Wednesday morning. Any questions about that? These signals are based completely on time. And so we can reference other markets. Those of you guys that are forex traders, we can catch some of the really large movements and see to the right-hand side of the chart the signals that are coming up next. So the software is essentially like a minesweeper. How many of you guys know what a minesweeper is? Anyone? One of the problems that they're having right now in the current conflict is all along the roads that the Russians were using to transport troops and fuel and supplies and tanks. All along those roads now, as they come back into the towns, there are mines, explosive devices that have been buried on the road surface. And so what our software is doing is essentially telling you what times in the future those landmines are planted by firms like Goldman Sachs and JP Morgan. The software is essentially saying, hey, there's a big one at 9:15. There's another one at 9:35 or 9:25. There's a big landmine at 10:10. And then there's another one at 10:20. And so that software here in the Great British Pound US dollar is alerting us on the right-hand side of this vertical line. Hey, dummy, when we get to these times in the future, Goldman's got a big surprise for you. So all of the signals to the left of that line were times that we were waiting for something. And we've shown these times in every webinar now for the last year. And if we go back and keep track of the ones where the move we were expecting actually took place, you can see that it's almost as though I've drawn these signals in by hand. Up, down, up, down, up, down. Right here near the double bottom, that large move up from 7 a.m. on November 4th until 10 a.m. on November 8th, a multi-day move being captured. The big move this morning on the Great British Pound Dollar, warning us, hey, at 7 o'clock, this thing is poised to pop for 4 hours. And if you used very minor risk here, you could have seen bottom, 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 and used a stop, gotten in right here, and held that trade until the first opposite time at 11 a.m. It's alerting us to these times where moves like this are likely to happen. It's not just on the lower time frames too. If we pop open an equities chart, we can look at a market like Apple, right? Warren Buffett's baby market, right? He loves this market. It's his baby. And if we look at the times that we were waiting for large movements in Apple in comparison to what we're expecting to come up in the future, you can see here that the software has been pretty much spot on most of the time, alerting us to the large movements and reversals. In my last webinar with you, I used a technique to show you a wave inside of these times, predicting a down move from October 25th until when? The up move at November 7th. And I've had these lines on my charts. I've been publishing them on our website and on our Facebook page and in our groups that we're members of. And when we arrive at these times, guess what? The banks did what they've always done on these dates. And so the software is alerting us to the fact now with Apple that we're expecting prices to rise until when? November 18th. That's 8 days from now. And if you were going to trade, you can see that there was a prior little candle right here. We never broke that low. And if you bought Apple at 139.22, you're presently at 146.75, right? And we can apply this to different markets like Twitter. And we can look and see what was the track record on Twitter. And maybe it's not as random as we thought it was. If you were going to buy Twitter, the last time to buy it was on September 19th. And the software was telling you with trend to get out by October 17th. And this is a place where stop runs are likely until November 25th when the buying begins again. Any questions about this so far? Any questions about how the software is analyzing the times to be watching for these moves? Here's a market that I love to watch. It's Tesla. This market is Tesla, TSLA. And very similarly, I can see where the next down moves are likely to occur. Here it says October 14th, November 14th. And the next place, if you wanted to try an up move, is on November 29th. And the last place the software predicted an up move was right here on October 24th. It was not a large move in any sense, but if you purchased, it was at 210 quarter, and it made it up $26 before it started to revert. The next signal coming is at 1114. If we continue to go down into 1114, there's now a low right here. If we come into 1114 and that candle is a brand new low, or the candle before it is a brand new low, it's going to be about another pattern 4. Another pattern 4, and it's probably going to go up from there. Buying opportunity. You talk about these weird patterns, Michael, but what does that mean? I mean, with time, there's a language of signals. And you become fluent in timing signals the same way you're fluent now with price action signals. So right now, if I asked you, what is a double bottom or a double top? You would say, well, I know what a double bottom or a double top means, and this is what I do. When there are patterns in price, for example, like the one I'm showing you here, really cool things can happen in relation to time. So one of the groups I'm a member of, the E-mini S&P 500 futures traders on Facebook, way back in the day, I published a screenshot showing a signal right here. Let me show you here. I'm going to blow it up. And on October 18th, Yusuf, can you see that pattern 4 on my screen? I'll blow it up so you can see it. And in that post, I warned people and I said, this is probably the bottom. I'll blow it up here so you can see it. View, zoom in 400%. And I put that signal right there and I said, hey, I don't know what's going on in the world, but I know what that pattern means. And I put a screenshot of what a pattern 4 usually does. And now we come back and we see that was the bottom here on October 14th, and it's going to continue to go up until November 16th. November 16th is the end of the cycle. In that same post, I said, we'll easily hit 4,000. That was earlier this morning. So the timing signals, whatever the market we're trading, whatever we're looking at, are pretty important. We can look at different markets and we can analyze them and try to find the signals. And this is another example of it. This is oil futures, right? And we look at oil futures, we can look at them on a daily chart. We can start to drill down and find the cycles intraday. This is a 60-minute chart. We can go down to a 5-minute chart, and we can find the times where these moves are really likely to occur. Any questions about knowing what times to look for in the future and how the software finds those and determines when they're likely to occur? If you want to know those times in the future and start to use those signals to confirm your signals, put them against your indicators, watch for volume the way you've always watched for it, order flow, support and resistance around those times, price action patterns. There's a myriad of ways to approach it. And this is a great opportunity for me to introduce somebody that's near and dear to my heart. Jacob, are you around, brother? You got your...
I am. I was just about to take a nap.
You gonna take your kale smoothie and start sipping on it down there before you hang?
Nobody wants to be around me if I'm forced to eat kale. I'll just leave it at that.
Come on, you bake it with some salt.
I try my best not to eat vegetables.
I'm allergic to green. So what I want, it was important for me to introduce you, and I want to come in here every once in a while just to remind everybody that you started out in the same place a lot of these people are, like Fred, for example, who's been to a bunch of these webinars. There's some new people in here. John Meadows is in here, a few other guys that are seeing this for the first time.
Oh, nice.
And I'm the theory and the big idea guy, right? I'm the Buddhist monk in the cave at the top of the hill who's been enlightened and knows how this stuff all works.
Yes.
But ladies, gentlemen, what I'm hoping you'll afford Jacob an opportunity to do, I want him to share a little bit about his story, his background, and go into with as much detail as he wants to about how he uses the signals to look for actual trading setups that have a known risk, a known reward, and so forth. And what I love about Jacob is that he took the knowledge and he put it in one of the most difficult crucibles you can imagine. And so in the last 5 or 10 years, there are a plethora of companies that have advertisements that say, we fund traders. And that's all well and good. And they'll tell you, hey, if you show us you can make $2,500, we'll give you a $25,000 account. But you can't lose more than $1,500 on the way up. And then there's rule number 1, 2, 3, 4, 5. They have all sorts of rules to prove to them that you actually can trade responsibly like a professional trader. And so this is very interesting for us, Jake. I think this is sort of like the Red Bull of trading competitions, right? You see these Red Bull competitions where guys, you know, they ride motorcycles over these giant things and they race airplanes. If you can do this, you're pretty much in the top X% of traders in the world. And I was particularly enamored when Jake said, hey, I got funded. Hey, and then I got funded again. Hey, and then I went back and I did it again. You're like, what?
4 times.
And then I went and I did it again. And each time he's doing it for a larger and a larger and a larger account. But for me, it's hilarious because he's taking money from the institutions using their own timing signals against them. And in a lot of ways, it's very cathartic for me. It's very much like this idea of jujitsu, right? Where 2 guys are fighting each other in the mat. And Jacob, the institutions are running at you, and then you kind of grab them by their arm and you use their energy to throw them away from you, right?
Yep.
You use your opponent's own energy against them, and you throw them in the direction you want them to go.
I practice Hapkido, actually. I do that martial art.
You do that. My wife
in real life.
When I don't empty out the dishwasher, Karen does that with me. So that's where I learned it. So I want the webinars to be less and less about me and my theory, and I want to try to get men and women in here, guys like Jacob, that have taken what they've learned and the tool that we've developed and tell you how they're using it, because I think that's what you're looking for. It's nice that there's a guru who made something and charges money for it, but can he teach someone else to use it, and can the thing that he taught them to do make money? And I know that's why everyone's here today. So, bro, I'm going to make you the presenter. I just wanted people to really know and respect you and where you were coming from, and kind of frame how hard it really was to do what you've done at first. And
it never gets any easier either.
Yeah, but
it did.
Yeah, but you got an edge now that you kind of rely on.
Yes.
And that's what all these people here they're basically Rose at the end of Titanic looking for a door to climb up on. And I want them to feel like, you know, not only is there a door, there's a boat, there's a crew full of people waiting to help them out of the frigid, icy waters if they want to climb out. So go ahead, make your share your screen. I'm going to bow out here, and please ask Jacob thousands of questions. He loves when you interact with him. And if you're someone who's interested in learning more about becoming a customer, Dave might reach out and contact you. Jacob's going to tell you how to get the software. But it was important for me today to just really frame how this stuff works, how these times are producing these moves, and how someone like you in the form of Jacob can actually trade them. Over to you, bro.
Thank you, Michael. I appreciate it. Okay, so what's up, everybody? How's it going? So now that Michael has said some light and lovely and fluffy things, I'm going to just pull what I wrote up here. This is what I've learned. You must be willing to be punched in the face, and not just once, not just twice, but at least multiple times, depending on what time frame one is trading. you have to be willing to be punched in the face multiple times. Just like learning any martial art. Good luck getting there without getting hurt. You know, like how much money combined have all of the traders that are on this webinar right now, how much money have we lost before we got to this point? Whether you have the software or not, or wherever you are in your journey. And then not even just the money, but the time. How much time have we all invested, just the people here on this webinar, before we got to this current day? And what I kind of want to start with is, if you have a strategy that works with TachEon TimeWarp, because that's what we're talking about today, and that's what I highly recommend people trade. And of course there's other ways to trade, but I can't stand it. I can't stand trading with MACDs and stochastics mixed with range charts and volume and RSIs and Fibonacci retracements and on 1 minute charts or 15-second charts. I just can't do it anymore. I need to know when, at least a window in time of when my trades might be allowed, when I might be allowed to push the buy or the sell button. And then I have to also realize every time I push that button that I might get punched in the face. But as long as I don't get punched in the face so many times that I pass out and get knocked out, and then everything's fine. What's beautiful about TachEon TimeWarp is that it lends itself to, it's a foundation. I look at it as like a foundation for building your own strategy on, or you can use, you know, any of this. I've taught a few different strategies on these webinars. Of course, Michael has been teaching the main 1 or 2 strategies, like ones with patterns and ones without, for years now. Probably in the, if you're talking about flux and whatnot, we're talking like over a decade. So like he was saying, you can use what you already know and combine it. I don't want to combine too much stuff though. And just because I have a losing day or a break-even day, I don't want to have to change my strategy. If it's in alignment with the max drawdown that I've back tested over 5 days, 10 days, 20 days, 30 days, whatever my back test is, unless it's super out of the box, like say my max drawdown on the NASDAQ is $2,500 in one trading day over the 25 days that I've back tested. And then I have a day where I lose 4,500. Well, holy crap. We better take a look at what's going on here and readjust, reevaluate. Possibly, maybe we don't need to, because maybe when you take that day into consideration with the other 25 days, maybe that's just the new max drawdown. There's no real way to know. The only way to know is to stick with one strategy that seems, at least in hindsight, as back tested, that is profitable. And it might only be a 51% win rate. It might be a 40% win rate with a 2-to-1 or a 1-to-1 RVR. So I'm just getting better and better at being punched in the face and holding on to those trades that like come all the way against me and stop me out, and then just pushing the button again, no matter what. I don't want to care so much. I don't want to care so much about accounts and money, and I just want to follow the rules. That's what I want to do. Okay, there's my rant. There's a chart. And thank you, Michael, for developing this fantastic software that, I mean, I don't really, you know what? I probably would have, I can almost guarantee it. I probably would have given up trading years, at least 2.5 years ago, had I not purchased and started to understand the software. I mean, I was basically at a breaking point, and I was like, I'm done. I can't sit in front of the screen. I mean, if you're trading something like the 3-minute or the 5-minute chart or the 15-minute chart, you can walk away and go take a break for up to an hour sometimes, as long as you are in the trade and all your conditions are met. But with the other most other styles of trading, unless you're trading a robot, you're staring at that screen all day, which in itself isn't that taxing. It's the as we know, it's the emotions. If you're anywhere, if you're not a stoic person and you have emotions, it can be quite taxing. But I've noticed for myself that the 5-minute NASDAQ doesn't really beat me up too bad emotionally. And now I have a profit target in ticks that I'm trying to accomplish in the morning, and then I'm done. So today, for instance, I hit that profit target and tick in the first trade. Done for the day. Why continue? And I mean, it was the right decision too, because the rest of the day on the 5-minute chart with my system wasn't great. Probably would have ended up. I haven't looked at it, but probably would have ended up right where I was when after that first trade anyway. Does anybody have any questions on what Michael was discussing? Oh, I don't know. Maybe it's not. I just took the share. Maybe it's not. Thanks for bringing that up, Christopher. It probably isn't. Oh, no, it was not being, no. It's okay, because I wasn't really looking at anything. I wasn't showing charts anyway, but now I don't know where it is. Oh, that didn't work out as well as I wanted it to. Darn it. So Michael doesn't usually hand the webinar over to me like this, and there was a little pop-up that said show screen, basically, that came from him, and I was like, oh, okay. And then I just clicked show screen, and I didn't tell it to share the right screen. So here's the right screen. I had written here in, I don't know where it is now, it's somewhere, but I had written here, must be willing to be punched in the face. And then I had that up there the whole time I was talking. Darn it. That would have been really cool if that would have worked out how I wanted it to. Oh, now it's gone. I don't know where it is. Oh, there it is. This is how it was, but this is how I was trying to start my side of the webinar out. Blah, 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 yeah, blah, blah, blah. Oh, thanks, Michael. I appreciate everything you've done, and thanks you, blah, blah, blah. And then I dragged this up, thinking that everybody was seeing it. And then I talked about being willing to be punched in the face. I mean, if you're not willing to lose trades, a lot of them, and then also continue to get back up and push the button again to work through your edge, and then you might as well just give up trading right now or switch to sim. Because if you can't take losses, you're not going to be able to hold wins. That's the way I look at it. It's like, I don't know. I mean, here's the 1-minute chart. I was just looking at it while Michael was doing his presentation. And so I put a ATR stop on here. I'll stop right here. So I'm trying to figure out a way to, I'm using more or less this system on the 5-minute chart that I actually trade on. I'm trying to determine a way, instead of just using the candle as a take profit and stop, like say this puncture trade right here, right? Instead of just using the candle, which in this case would have been fine. So if we would enter here, and then we'd have target 1 and a target 2, but we're going to close our position right here anyway. But instead of using just the candle, which is just an average true range of 1, basically, why not use an average true range that's, I don't know, kind of in alignment with the average true range that is the dot price line? So this ATR stop right here is set to the same settings as the dot price line. So instead of a target 1 being here, I would actually just drag the stop to where the ATR stop is right here. So far what I was looking at on the 1-minute today, had I traded the 1-minute, which I don't, every time I think I can trade it, I think again. it either takes a day or 2 or 3, and then I end up wanting to pull my hair out. But I mean, if you can trade it, by all means, go for it, because Warp does over time work quite well on the 1-minute. I just can't deal with it. But a lot of people love it. I used to be able to trade the 1-minute. I don't know. Not successfully though. So yeah, instead of having an ATR of just the candle, why not have this ATR having something to do with the last 7 candles? Same as those. Let's check the settings just so everybody can see what's going on here. So TachEon, TimeWarp, swing 8, 7, 14, stop offset 1.5, offset ATR period 7. And this is just a free ATR trailing stop that I found on the NinjaTrader ecosystem. You can send me an email at jacob@backtothefuturetrading.com, and I can send this over to you if you want. I can also send you this little fib tool deal that I made. It's just a fib tool that I put certain percentages on and made colored and whatever. So yeah, here the ATR trailing stop period is also 7 and 1.5. So when we're in a trade, so say this trade here, this 934 dot, let's get rid of these just for a second. Well, this is the idea. I'm kind of brainstorming this on the 1 minute at least. I've been looking at it a lot on the 5 minute, but on the 1 minute, I feel like, man, I mean, yeah, we're gonna take some losses. I mean, I already saw like this whole lunchtime period. This is why I say you got to be willing to lose. Like this is actually what I like to see. I want to see how many. This is really important. I feel like for any trading strategy, how many losers in a row? Like what's the max losers in a row for any given system? You got to trade a lot of. You got to test a lot of days or a lot of trades to figure out what that is. So here we have 1, 2, then a winner. So 1, 2, 3, 4, 5 losses in a row. Are you going to be able to stick with your system after 5 losses in a row? Well, a lot of people have a hard time with that, myself included, especially if I'm being influenced by somebody like my little brother, for instance, who I try to keep away from me when it comes to trading talk, because he knows a lot and he's very intelligent, but he doesn't use TimeWarp. He is stuck in his old ways of stochastic and MACD and golden crosses. I call them golden showers if they're shorts. And he'll have little ideas and good ideas often, and we'll be like looking at a chart together or talking on the phone, and he'll start wanting to talking about trading. I'm like, dude, I can't. I'm sorry, I cannot talk about trading with you. If an idea will get in my head, and I think I won't mess with my system or my psychology, but then I'll see whatever the thing is that he said happen on the chart, and then who knows, I might try it, and then I've completely screwed my system just by even entering 1 or 2 trades with somebody else's idea. So it's like I have this Puritan view for myself of trading. So I don't want anybody in my head. Maybe a lot of people don't. Maybe people don't suffer from that. Well, I have friends. I have a lot of people that I talk to about trading. You know, I have like multiple trading friends that I've actually met through this company, plus my brother. And yeah, I really just try to stay away from that. Anyway, so yeah, 5 losses in a row. So that's good to know. So now we have 5 losses in a row, and say we knew that from like testing 30 days. 5 is the max in a row. All right, cool. Well, if we're like 2 or 3 or 4 more than 5, then maybe something's totally wrong with that day. Maybe stop trading, something like that. But every trading system, I don't care how good it is, you're going to have a max consecutive loser in a row. So this is from so far what I've found and just testing today real quick is these 5, 1, 2, then we get a winner, then 1, 2, 3, 4, 5 losers in a row. But then we had some massive, beautiful winners leading up to that. So getting back to this 934 trade, and you know, a lot of this is real similar to anybody who's been, excuse me, on the webinars with me over the last however many couple months that I've been doing these. It's not that much different than what I have been showing. So we're not using the open price line, although we could. I'm just trying to keep it even more simple than using the open price line, and also no patterns. I haven't tested the 1 minute with the patterns. I'm just trying to keep it as simple as I can for just today. Blue dot, that means we're selling. White dot, that means we're buying. So blue dot, well, that means we're selling, but we also need a blue HMA. Well, we don't have that on this candle. This is all East Coast time, by the way. We need our HMA, obviously, to be blue. Doesn't matter about a close above or below, we just need it to be blue. We need our HMA to be blue, to be in sync with our blue dot. And then we also need our ATR stop to be on top. You can almost think about this ATR stop as if it's just another HMA or EMA or something. So we need to be below it. Otherwise, how are we going to know how to place our stop, right? So the ATR it flips right here. I love this ATR stop. It's really nice. And then I set it on what do I have it on? Blocks. So it looks cool like this. I think it's block. Square. So if I didn't have it on square, it would look like, look what it looks like online. I don't know. I don't think that's not the reason I put it on block is because it's much easier to back test. It's way easier to draw flags. So if we move it back to block, square, you can easily see where the stop would be ratcheted to on the close of the next candle, right? Pretty cool. So all we're waiting for to enter this 934 window is really just the HMA to turn blue. Not yet. Good thing we weren't entering. And HMA is blue on this big fat candle right here. So we'd enter short here at the close. And then instead of dragging our stop all the way to the stop price line, I know a lot of people complain about, oh, the stops are too big. Well, this is a way that I'm seeing seems like it has a pretty nice edge to not have to make your stops so large. And also a way, instead of just using the candle, using the ATR of the previous 7 candles. So we'll just drag our stop to where the ATR line is. And we're looking for a target 1 down here, a target 2 here, and then we have a runner position somewhere over here if it happens. And then we have 3 stops up here, 5, 10 ticks above the ATR stop, maybe just 5. We'll just do 5. So once our first target gets hit, we'll move our 2 remaining stops to break even. Then if the ATR stop gets down here below our entry, then we'll attach our 2 remaining stops to the ATR stop trailing. So we'll constantly be able to ratchet. Actually, we'll just do that as soon as we can. As soon as that ATR starts coming down, that's where we're going to move our stops to. So for instance, this is what I've been doing lately. Yeah, never stop learning, never stop improving. So say we had 3 stops here. Oops. Control C, Control V, Control C, Control V. So we got our 3 stops here. We'll just pretend that this is, because it's going to be kind of annoying to move all 3 of those. So now this candle closed. So we're going to move our stop. We can either do it manually or you can attach the stop tab to the indicator. It's really easy to do. Then we're going to move on. Oh, then we also ratchet down 1. So now our stop's getting tighter. Doesn't move on this one because our candle closed a little higher. Then we hit target 1. And since we hit target 1, we're allowed actually to move our stop to break even. Then we're coming up on target 2. We're actually allowed to remove our 2 remaining stops to the ATR here. And we don't hit target 2, and we come and we get our 2 remaining positions stopped out right here. So we had entered here. We did hit target 1. Then we get stopped out on our 2 remaining right here for 2 61 tick winners. So right now on the 5-minute, I have a tick goal of somewhere between 400 and, depending on where the trade ends, 1,000, 1,500. But I have to have a minimum of 400 ticks won, including all positions, before I can stop trading for the day. Sometimes you'll be in a trade and I'm not going to stop a trade in the middle if there's a runner. Maybe instead of 400 ticks, we'll go for 1,000. But after that, then I have to be done. Does that make sense? I feel like that's pretty simple, especially if you've seen any of the other webinars that I've done. The settings on MQ is all standard settings, George. Oh, yeah, absolutely, John. Here, 1 second, I need to get a beverage. Oh yeah, okay, good. Soda water. Does anybody drink LaCroix? I like to say it LaCroix just to make people think that I'm stupid. And I like to see their faces. Hey, can I get one of those LaCroix? I actually heard that it's produced in Minnesota and that's how they say it. So I'm in the know, even though it looks like a French thing. LaCroix. LaCroix, the bubble waters. So yeah, that was our trade there. And then we're looking for a stop puncture up here. There it is. So we'd be allowed to take one short in this window. And if we get a stop puncture up here, stop me if anybody has no idea what I'm talking about these stop punctures, because I'm getting a little, what's the word? I'm finding myself wanting to just gloss over things that I've went over multiple times in the webinar. But I'll stop here for a second. So this is called the dot price line, right? This is a selling window. I'm going to slow down. Selling window. So over however many days, weeks, TachEon TimeWarp, 12,000 lines of code, has been looking through the historical data. It has produced for us out here in the future a window in time in which historically there has been more selling than buying. That's all that this is. Sounds simple. I'm not going to go try to predict these dots. That's why I bought the software, professional institutional grade software. So if after, say this trade wasn't successful and it started going the opposite direction, or even in this case, like, sweet, we got one short, all winners, cool. Now it looks like it's turning around. The institutions have done their selling and now they're going to do some buying. Okay. If we get a puncture above this dot price line, we can actually go long. So Michael might say something like, well, the sellers didn't show up for this move. Well, they did show up, they just weren't here for long. So a puncture above this stop line here, the dot price line, is an indication that that the buying could continue, or in a case of getting stopped out, if you're using the dot, you could actually kind of stop and reverse. But I do wait for a close above. I do my best to wait for, I pretty much always wait for candle closes. So it's always good to have a bar timer. There's one called the August bar timer that you can get that it's free. It's on the Back to the Future site, actually. If you log in, it's way down at the bottom under your tools and stuff that you've purchased, or your profile, or whatever it is. August bar timer. Or you can just use the one that NinjaTrader has and it'll print down here. But the August is cool because it follows the candle. So we can enter a long here on this candle. And I call these STP trades, or stop punctures. Because I don't really have, with my system, I don't do closes above or below the HMA because it's so fast moving. This is a 35 HMA, by the way. The 21 is way too fast for the 1 minute from what I've seen. It's too whip-wappy. I want something smoother and just going to give me less trades, because the 1 minute already offers so many trading opportunities, even with the swing 8. So this is a 35 HMA, 1.5 ATR, multiple for the dot price line. So here we would enter long and we would do the same thing. We're just looking down here at the ATR stop to place our stop, which in turn places our target 1 and 2. And we don't hit target 1 or 2, but we do make 389 tick winners. See, at this point, depending on, I would need to go back and do a bunch of back testing on the 1 minute, but like at this point, 3 winner, and I actually do call these. I argue with my little brother sometimes about, well, I don't argue with him. I don't know if he gets it or not. I'm like, dude, these are 3 separate trades as far as I'm concerned. Yeah, they might be the same entry, but they have different targets. So I'm calling these this is 6 trades as far as I'm concerned. 2 entries, but there's 6 separate positions, so I'm calling them separate trades. So after these 6 trades, you can look at it as 2 trades if you want. We've made 89 times 3, a 61, a 62, or whatever it might be with slippage, and then 150. I might just be done after that. I'm not sure what the best target is for the NASDAQ 1 minute with this system yet, because I just don't know yet. And if we're using white dots and blue dots and no patterns, if we're going to use patterns here, we would not be entering a long at this white dot, because this is a pattern 5. This is a brand new high at a white dot. But we don't really need to go into that today. I did that on like the last webinar, the webinar before, I think it was. Detroit, actually, Richard, is where LaCroix's made? What did I say, Wisconsin? Detroit is Michigan. I don't know, I kind of confuse all those states up there. Sorry about that. The Great Lakes there. No, Wisconsin. Oh, no, I know which one Wisconsin is. Yeah, Michigan. Yeah, I don't know. Sometimes they get a little jumbled in my head up there. So yeah, but if we're not using patterns, then we can just buy at this white dot. Okay, well, historically there's been buying at 9:59. Okay, well, let's enter along. I actually don't really remember what's going to happen. I didn't look at the 1 minute today for only like the last 10 minutes while Michael was talking. I'm pretty sure this one's a winner though, but I really can't remember. So all we're going to do is just going to drag our stop to where the ATR says. There it is. So what's cool about this, I think, is that it's saving us 71 ticks. If we're using the dot price line, we're coming all the way down here like this. That can freak some people out. It freaks me out. But at least, and then you can play around with different settings on this ATR trail. I mean, I've been using this ATR trail for probably like a year and a half or something. It's good code. Never any problems with it. So yeah, we'll shoot for target 1. Oh, don't hit it. Oh, okay, sweet. So how does that end up playing out? Okay, cool. I'm actually glad that this happened. This is a good example of almost hitting target 1. Man, we're so close to 14 ticks, but we didn't hit it. Let's stay quantitative. So these little arrows will show up on the indicator. Again, just send me an email, jacob@backtothefuturetrading.com, and I'll send you the ATR stop file, because it's kind of hard to find on the NinjaTrader ecosystem. So whenever these little arrows show up, that just signifies, especially for back testing, it's helpful that the ATR flips to the opposite side. Did you see that? And then this candle closes, and then we get an ATR flip. ATR stop. I just call it an ATR because that's just a lot of words, man. A lot of words. So we would not, let's see, how far does it come back down? So had we not used the ATR stop, let's see, we would have ended up losing, oh, it's about the same, it ends up being about the same on this one. So wherever this arrow is, that's where we end up having that the trade taken off. So it looks like about the same. Oh no, it's not. My eyes are playing tricks on me. Oh yeah, we save a ton. I just gotta move the chart a little bit. Yeah. My eyes are just like totally playing tricks on me. Yeah, look at that. So instead of losing 67, we only lose 25. I feel like a lot of, myself included sometimes, a lot of traders, especially new traders, you're looking how to maximize profits. Don't leave money on the table, blah, blah, blah. Well, what about how to minimize losers, right? This ATR stop's a great way to minimize losers without sacrificing too much in the way of gainers. And I've seen this thing work for a lot, this ATR stop with the right settings for the right market. Right now it's synced up with the TimeWarp. So we lose 25 times 3 because we got 3 positions here, right? So instead of 67 times 3. So I'll take that. But remember I was saying like, oh, maybe we want to be done. I took one trade today and it was like, I don't know, it was like about 600 ticks total. I was like, yeah, okay, cool. That's my goal. I'm done. And then I was able to go concentrate on other things. So here we have a blue dot at 10:20. So another selling window. Nope. I think I do that every webinar. I do. Every single webinar, I push the wrong F. Push in. So another selling window. And we would, our HMA is blue. We have a selling window, so we're synced up. Our ATR stop is on the top. That's where we want it to be. Here's our stop. Our ATR flipped way back here. So we want our price action to be underneath the ATR line, our HMA to be blue, 35 HMA, and we just need to sell. And if we're using patterns, we could maybe argue that this is a pattern 4. Maybe that's a new low. Depends on how you want to look at it though. And that's one of the challenges with using patterns. Is like, is that a new low? Like it could be argued. It could be argued that it's lower than this dip, right? Maybe that's a pattern 4. Pattern 4 actually inverts the selling window into a buying window. But for this example, you don't need to use patterns. If you can come up with a system that you don't need to use patterns, then by all means, don't use them. So I don't know, just for instructional purposes, there's already a lot going on here today. So let's just not use patterns. So we're just going to drag our stop to where it's supposed to be in alignment with the ATR, and we'll see if we can hit a target. No, and this is why I said we're 5 ticks above. Did you see that? That's like 2 ticks, 1 tick, 1 tick, 1 tick. So I always like to keep my ATR, my stop 5 ticks above. At least, maybe 10. Let's see. Okay, so yeah, we hit target 1 here. And we move stops to break even. That's the 2 remaining. Oops, get out of there. And then our 2 remaining stops get moved to break even. And then we continue on, and damn, we would have hit target 2 there too. Let's just extend this over. And our targets don't move, right? But our stops do. We got to keep our target right there. Otherwise, you're doing some crazy stuff. You're like, oh, my stop's there, then I better tighten up my target. Oh, my stop's right here, then I better tighten up my target. Well, that's just ridiculous. We're not doing that. I did have the idea though. I was like, oh, maybe that one. No, Jake, no. Calm down. So there's one target 1, stops to break even. And then as we're moving along here, let's do it more like it would be in real time. And we're going to move our stop down. We have 2 remaining stops, right? And then the next candle closes a little higher than the previous, so our stops stay where they are. Stay where they are, stay where they are, still staying. Oh, and then here at the close of this candle, we're allowed to move our stops 1 deviation lower. And then we would have hit target 2. And we continue on, and our runner actually does help us out on this trade. I mean, if that wasn't enough for you, how do I really, if I'm trading this 1 minute chart, do I really want to keep trading after that? It's just about making a rule of how many ticks you want to go for, or what do you want to just take every trade in the morning session and then be done no matter what, or do you want to shoot for a tick goal? I recommend shooting for a tick goal instead of a monetary goal, because that way the scaling is going to be easier to think about. Right. Okay. So let's do one more. This is actually pretty fun. I like this system. So here's a white dot. This is another buying window. Let me just move this over just so everybody, because this will be available on YouTube probably later tonight, like late night, but definitely tomorrow. So yeah, white dot. This is another buying window, but as we can see, our HMA is blue. Let me move these out of the way a little bit just so we can see here. Our HMA is blue, so we can't go long, and our ATR is also above the price action. So can't go long, not quite. Okay, so we still can't go long even though our ATR flipped because our HMA is blue. So here our HMA does turn white. Oh, and this also solves, I can't remember if there's a couple, oh, maybe Mike, was it you, Mike? Somebody sent me an email, or maybe it was one of the meetings. Might be you, Mike Lewis. Good to see you, by the way. Good to see everybody. Thanks for being here. Pointed out that with this HMA system, since we don't use punctures, or if we have a down candle, well, here's how I was doing it. This is why I think this is an important update to the strategy that I've been kind of brainstorming here with you guys, with you folks over the past few months. So this bearish candle here. So before, the way I was trading, I would have needed a bullish candle here. Otherwise, because I was using just the candle of the HMA flip to place my stop and target. Well, you can't really do it with a bearish candle. You need a bullish candle, right? But with this, and I believe it was Mike who pointed that out. And I was like, oh, that's a hole in my strategy. Thank you for pointing that out. Yes, I need to make it a quantitative rule that when the HMA flips its color to white to be in alignment with the signal, with the buying direction, buying HMA, you can look at that as a buying window. You have to have a buying candle, but oftentimes those buying candles will be a little late, and then you get stopped out because your stop is just at the bottom of that candle. And especially with the NASDAQ, they'll come down and they'll stop you out, and they'll take your money, and then they'll move it right back up in the direction that you thought it was going to go in the first place. So, but with the system update with this ATR, we can use a selling candle. Like, it can be really nice, I think, to get in along on a selling candle. It gives you a little bit better price. So we can just drag our stop to where the ATR is. So we have a definitive place to place it. It's like, oh, well, I could place it on the HMA. Really? It's a curved line. I don't want to be placing and trying to back test things on curved lines. No. Besides, I don't know how much significance the HMA has as support and resistance. I think it's primarily just it's a trend indicator. It's not like the 20 EMA that actually does often provide support and resistance. So we'll see if we make a target on this one. Oh, we do. And this whole time, we have a target. I'm just gonna go over this again. Target 1 is here. Target 2 is there, and then we also have a runner up here, and then we have 3 stops down here. Oops. And we're just using white dots and blue dots. So we got our 3 stops down here. Just pretend that that's 3. And right here we have target 1, target 2. We get filled on our target 1. And in the meantime, as we're getting there, right, this candle closes a little bit higher. Then we're moving our 3 stops up to here. Then a little bit higher, 3 stops up to here. Next, next. Bam, sweet, hit target 1, and now look where our stop is. We're better than break even. We've actually secured 35 ticks, because this can be a problem is trailing stops and knowing when to do it in a quantitative fashion. I mean, I've had other ideas to make it quantitative, like drawing these 50% boxes, right? That's just another idea. Maybe somebody would like this method instead of the ATR stop. And you could come in, you could load one of these little 50% things that I have. If it will load. Oh, come on. You can do it. There you go. And you can 50% this in half here, and then you can be like, oh, well, if I have a candle closing above 50% on the way at target 1, then I can move my stop to 50% here on the in our stop window. And then once we hit our target 1, then we can move to break even. Okay. And then you can do the same thing up here. Like, oh, okay, cool. Well, we've closed above our target 1. We've even closed above. Sometimes you just hit the target 1 and then it'll reverse or come back to stop you out, break even or whatever. But we've closed above, then we can move our stop 1 line up. And then it closes above here, 1 line up. So that's another way you can do it, but you can't attach your stops to, it's so much easier to be able to just attach your stops to the indicator and not even have to manually do it. Anytime I can get NinjaTrader to work for me and I don't have to click buttons, oh yes, I'm taking that route. Sorry, let's continue on with this trade here. Why am I saying sorry? I don't know. Oh, hold on 1 second. I'm gonna close my window because there's somebody out there with a mower. 1 sec. I think that mower or the mower and a blower happens every other week because my neighbor's gardener must come at this time every other week. So there we go. Beautiful weather out here in California lately. I love when it's cold. Well, it's not cold, California. When it's quote cold in California, it's like 50 degrees. I like real cold. What's the coldest temperature anybody's ever felt? Yusuf, you should be confused. That's my goal here, is to confuse the heck out of you. So if you're confused, we have been successful. Just kidding. What are you confused about? Minus 50, Richard. Oh. That's pretty damn. Richard, where was the minus 50 without wind chill? Oh, you got it, Yusuf? Oh, sweet, awesome. Without wind chill, Richard? Minus 50 Fahrenheit. Calgary, I believe you. I believe you. Fahrenheit or Celsius? They match up at some point, especially when they get into negative numbers, Fahrenheit and 58 Fahrenheit. Oh, okay. Anybody else? Coldest temperature ever experienced outside? This is gonna sound like I'm just trying to one-up you, Richard. But really not. It's just funny that you've experienced the 58. So I used to live in Winter Park, Colorado. Well, Fraser, Colorado in particular, which is right next to Winter Park, Colorado, 8,500 feet elevation. And the way that the mountains were around this valley, we would get all this katabatic airflow at night, and it would just sink and into the valley where we all lived. And they called it the ice box of the nation. And there was somewhere in Minnesota that was also trying to call themselves the ice box of the nation. And there was like a little bit of like a friendly feud between Winter Park and whatever that Minnesota town was. So one day I'm driving home from work and managing the restaurants at the ski area. And you know how banks used to have the clocks out front with the time and the temperature? We don't have that anymore. We need more of that. Maybe it's just because they don't have it in California. Because who cares about the temperature in California? Anyway, I looked at the local bank as I'm driving by it at, I don't know, it's probably like 9 at night or something in the middle of winter. And I looked over at that thing and it said negative 60 Fahrenheit. And I was like, I was by myself. I was like, I'm going to go ahead and have to pull over into the bank parking lot and get out of my car because that is the coldest temperature I've ever seen and might ever see again. And when I got out of my car, and I mean this literally, I could feel my eyeballs starting to freeze. And it was so cold that you could spit and it would be ice by the time it hit the ground. I love that story. So as we're moving our stop loss up. So what's awesome about this ATR stop idea in conjunction with warp, there's a syncopation between the dot price line and the the 7 ATR and the ATR trail. So by the time we get to the close of this candle, we have secured almost 90 ticks of profit. It's just way less scary, I feel like, to trade this way. And like you can just have NinjaTrader, the ATM will just, let me see if I can show people. Let's see if it'll let me execute a trade here. I'm gonna bookmark where I am here. And just while I'm thinking about this, let's see if I can show you guys how to do this. All right, so let's say we'll just, oh yeah, this is like the exact time where there's where the market's not moving at all. But I still might be able to show you. Where's my, oh, it's way down here. Okay. So say our 3 targets are up here. I'll expand this here in a second. Okay, and then say that we were like this. Oh, I mean, this is kind of a trade that we would be in. We would have entered a puncture trade here. Let me get this target where it's supposed to be. This target where it's supposed to be. This is our runner, so we'll leave that up there. We're slipped on our entry by 6 ticks. So, but our entry should be right here at the close of this candle, right? So our stop loss starts out down here with our ATM wherever we want it, you know. Like this is the ATM that I start with for the 5-minute. I just want nice wide stop losses so that everything's out of the way. Then I'll just drag my targets into where they're supposed to be, leave the runner kind of out of the way. If you're using the 1 minute, I suggest 75 tick stop losses as a place to start, and then a 75, 150, and like a 200 or something. But you're not actually using the ATM. It's just to get your targets. You got to move your targets to where they're supposed to be. Just a way to spread them out. So once we have entered our trade, I'll manually move my stop loss to be in alignment with the ATR stop. Then you can come over here and you can right click on stop 1, attach to indicator, properties, ATR trail stop. And here's, you can tell it to offset if you want. So I'll show you one without an offset. And you can't really tell, but it moved it. Oh, here, let me hold on a second. That's kind of cool. It just moved them all at the same time. Attached indicator, properties. Maybe that's because we're aftermarket hours. Okay. So there's one. Then we have 2 left that we need to get up there. Attached indicator, properties. And if we wanted to offset this one by -5 ticks, okay. So now it's going to be 5 ticks below where the ATR line is. And maybe we want this one to be 7 ticks below, -7, or you could actually have it +2 for whatever you want. So now it's 2 ticks above. But that's really fast. It's really fast and really easy. So we don't have to do anything. As say we would have gotten the trade over here, we would have already been ratcheted up. I just like saying ratcheted up to here, to here, to here. So if we would have gotten in here where we were supposed to, try to say that 10 times fast. Then our stop comes to here, to here, to here, constantly tightening. Don't get stopped out there. Close. We might have been stop punted, but we're back testing. So then we get moved up to here. So we'd be getting close to break even on that. 13 ticks away. But we entered late. So does that make sense? I just wanted to show everybody how easy it actually was to attach the stops to an indicator in case everybody hasn't done that before. Okay, let's go back to that trade before I distracted myself. Where was it? I put the markers. Oh, here we go. I hope this is helpful. It's giving some people some ideas on how to keep your stops tighter and secure profits. Have you ever heard any traders say instead of secure profits or make money or ... secure alpha? I kind of rubs me the water. I don't know why. It's like I kind of don't like the saying, but I also kind of do. Like, yeah, how much alpha did he secure today, bro? I kind of like it. What was I doing? Oh, yes. I took my meds. I don't know why I'm so distracted. So we don't hit target. So now our stop loss is all the way up here, which is great. And then on this candle, it moves to here. And we don't hit target 2, but we hit target runner. So we have to close all positions flat at the blue dot. Does that make sense to everybody? Does anybody have any questions? I mean, I feel like I'm doing a pretty good job explaining. Let me see here. Yes, that's right. Everything freezes. Oh, yes. Yusuf, you're good. John, are you good now? Does it make sense? Are you even still here? Looks like a lot of people are still here. It does? Okay, sweet. Nice. Awesome. Yay. It's one of the reasons I like doing these webinars. It's like if I can explain a strategy and people get it, then it helps me. Like, I mean, has anybody noticed any holes in the strategy? Because that's it. I mean, that's like it. There's nothing else to do with this strategy. Is there anything that you think like you could poke a hole in? You know what I mean? Like that's another reason I like showing these strategies that, well, this is still more or less a very similar strategy than the one that I originally started with on the NASDAQ 3-minute, except I'm taking for the 1 minute. What I noticed with the open price lines and the closes above is that I started getting frustrated with these, and Michael was speaking about it earlier in a message. When you get, this isn't really a big candle compared to, but like this one right here, oftentimes you'll get these giant candles that close below the open price line that end up completely reversing and go in the opposite direction. And you can take a lot of heat, and it's frustrating. It's frustrating to take 92 ticks of heat before, and it's emotionally kind of taxing before you actually end up with your 100 ticks of profit, you know? So I've been steering slightly away from the open price line method and more towards entering either right at the dot or when the HMA flips color, and then using the ATR stop instead of the candle. So it's the foundation is still the same. So here at this 10:53, I'm not going to do an exhaustive. I mean, this is already a ridiculously fantastic day that anybody in their right mind would probably stop trading now. I mean, seriously, this is ridiculous. Like, how long do you think this is going to keep going on? I mean, like, seriously. I mean, let's just calculate it up. Like, isn't that enough, you greedy bastard? Seriously, like stopping trading today after I reached my tick goal. It seemed easier than all the other times that I've ever had a tick goal as part of my strategy, but it's still not easy. It's like, oh, but I think I should keep trading a little bit more. I think maybe if I just trade a couple more times, then I can like quadruple my account. No, you're not gonna do that. That is not reality. That is some crazy fantasy of craziness. No, just stop. Stop. I mean, so there's also like max winners in a row, right? Like what on any particular strategy, I don't know what the max winner is on this strategy, but say it's 5, say it's the same as the max losers. 5 winners in a row, that's the max out of the 30 days, 50 days, 100 days, or whatever that you've tested. Stop after 5. Just stop. The market is not going to keep doing this. You're not going to keep, I'm sorry to break the bad news to everybody, but the market is not going to keep giving you this much alpha before it punches you in the stinking face or somewhere worse. It might curb stomp you after 5 winners in a row. You know, we're getting close to like the lunch hours coming up, and I mean, I can already tell you by just looking at the open price lines that we're going to start ranging. Like, take your alpha, be a good boy or girl, and go home before you get your butt kicked. Yeah, I mean, that's a good goal too, Richard. Take all the money that you can. Yeah, I mean, yeah, totally. I mean, I've been realizing that I actually had to build into my strategy how to deal with dropping my daughter off to school on Monday and Tuesday. Like, what time frame chart should I really be trading if I want to be able to trade Monday and Tuesday, Wednesday and Thursday and Friday all the same way? What chart can I do? Like, because right in the middle of the beautiful, right in the perfect middle of the morning session, that's when I have to leave the office on Monday and Tuesday. So that's been challenging since school started. Let's just see for fun. So I can 61, 62, 151. I mean, that's already 540 in the first 2 trades. That's where I was at, or so, something like that on the 5-minute. 200, 7. I mean, it's obviously ridiculous. I mean, you could probably just do the math in your head. 1,500 ticks. Please stop. Just be done. I mean, because we can see, oh, we do actually end up getting some more winners. This was a winner. That was a winner. See, this is how the market lures me back in. It's like, oh, well, maybe I should just keep trading because that day was, but I went back and I tested, I don't know, over 20, probably up to almost 25 days on the NASDAQ 5-minute. And I started to see a pattern that somewhere between 400 and 1,500 ticks, and the market just starts taking it back. So we did have a winner here, another winner here, had another winner there, and then we got our 5 losers in a row. I mean, even if we tally up those 5 losers in a row, I mean, we could do that. And then we have more winners, more winners, more winners. So, I mean, this day was, a lot of these were no trade. Maybe I should show here. Let me show an example of a no trade. No trade at all in this window here. So the 149 signal is a short signal. White HMA, can't short. We're above the ATR stop. Nope, can't short, can't short. Nope, 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 no, 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 no. So not at all. And then we get to this 209 signal and our HMA turns blue. Well, good, because I don't think I want to trade this stinking range anyway. All right. No, no. Oh, and then right here, just because of that one little flip of the HMA to white, that means we have to go long. And we'll probably get stopped out, and we do. And then that's it for that trade. And that was like a 44 times 3. But a lot of these, I think this was the only one. Yeah, so no trade, 1 trade, no stop puncture, no trade here. Oh, well, this would have, if you're trading with one, this is another good thing to show. I try to stay away from entering, like, I don't actually. I don't enter trades that are 1 bar before the next signal. So like we literally only have 1 minute from when this candle here closes blue, closes down, and our HMA flips right here on this candle. What? Yeah, you're gonna short right before 233? You might as well just give your money back. And then you lose 19 ticks if you do that. I want at least 1 candle before the signal candle. I think Ron says 3, I'm not sure, but it's definitely more than 1. And then we wouldn't, here's a really cool example. I love this. This is not my first rodeo with this ATR stop and a moving average of any kind. So what's awesome about this is one of my favorite things actually. So 233, buying signal. Well, we can't buy because our HMA and our ATR are in the shorting position. Still in the shorting position. Our HMA turns white here, but our ATR stop is on the top. So we've created this like little range box kind of between the HMA and the ATR stop. So we're not allowed to trade. HMA says we can go long, but the ATR says we can't. We can't do anything. So we do nothing. They both need to be in alignment. And that doesn't happen in this window. So no trade. And then we come up at 238. And by this time, I'm like, oh my God, I'm so sick of staring at this chart. I can't do it anymore. Just get me out of this chair. From 149, yeah, just an hour, but that's enough. An hour, one loss in an hour. Oh, and then here's another example of one of those boxed out no trades. So 238. Here, had we not been using the ATR stop, we would have been able to short on this candle because that's where our HMA turned and closed blue, but our ATR never flipped to the other side. So it's kind of, you see what I mean? It's kind of like using another moving average. Except it's more, I feel like it's more, an HMA is more dynamic than an EMA or obviously than a SMA. I mean, just the mathematical formula behind the HMA is more dynamic than an SMA, of course. But here we never get a short signal and we don't get a long signal. And then 253, then we come back up on some syncopation. So we have a white dot, we have a white HMA, and our ATR stop is in the correct position, down below the price action. And then we enter, we hit our target 1, our stop. Because we hit our target 1, we can move our stop to break even. And then this is what I was, oh, see, stop to break even. So we had just one. Oh, it's a long flag up there. Does that make sense to everybody? I don't want to beat a dead horse. I think that's a pretty good description of what we got going on here. Richard has a question. Is that a Ninja ATR curve? It's a NinjaTrader. I got this ATR stop from the NinjaTrader ecosystem. I wonder, I don't know if I can post. Yeah, I can't. I don't remember. I don't have the link. Otherwise, I'd post the link in the chat. But just send me an email. And I can also send you this little fib tool that I made to Jacob at Back to the Future Trading. And then let me know if anybody wants a mentor session on patterns or this strategy or others, or just, I don't know, wants to know more about Warp, all sorts of stuff. Let me, oh, hold on, one more question. Oh, okay, Yusuf, that's a good question. Okay, why long for this last trade? The candle didn't close above the OPL. Yeah, we're not doing OPLs. I might as well just get rid of them. I like them on there still because they help me know where they open of the, yeah. So this strategy, I take out the OPL requirement. No LPL requirement. That's why. Yeah, Richard, send me an email. Jacob at backtofuturetrading.com, and I'll send you an email back with how to get that going. I'm glad you asked that question, Yusuf. Yes. So yeah, no care or mind of the open price line to confirm, because we already have multiple. We have the, we need the magic 3. We need to close in the appropriate color direction, if you will, of the HMA. We need our ATR stop to be in the appropriate direction, and we need our window to be in sync with both of those. So 1, 2, 3. Okay, sweet. Let me pull up for anybody who doesn't have the software. It's the other thing I'm supposed to do here. Magic Jinga. Yeah, if anybody doesn't have any questions on the strategy, then I think we'll move on. So that was today, man. Today was not easy on the 5-minute. Well, it was easy on the 5-minute because I only needed to trade one trade. Actually, I don't know. I don't know how the rest of the day would have been on the 5-minute because I didn't even look at it. Don't care. Well, I do care. That's a lie. I kind of just want to see for fun, like how. Oh, I did mark out some of these. 46, 41, 33, no trade. No trade. No trade. Oh no, that would have been a trade. Loss, win. Loss. small loss, win, loss, win, loss, win, loss, big win, no trade, double win, loss, but a very small one. 15 ticks because our stops got ratcheted. Loss, stop and revert. Because of this stinking candle here, stop and basically almost reverse, and then a win. Massive, beautiful win. So yeah, I mean, just glancing at yesterday, it seems like it would have been a winning day. Just from, I don't know, who knows? It's too much for me to handle. Dealing with, doing all the math and everything on marking all those trades. But it looked pretty good. And yesterday was a stinker. Yesterday, I feel like was even more challenging than today. And I blame it on like election, the election results not being situated yet, and product store. Why did it go to the North page? So weird. TachEon TimeWarp is what we're talking about. 83 Trustpilot reviews, 5 stars for Back to the Future. Good job, guys. It's not easy to maintain reviews. So we'll just go to the product page, TachEon TimeWarp, then we'll scroll all the way down, and then there's your buy now button. And you can either buy now and then you can get a discount on the Pro Training Room with Ron and Colin. 25% off. That's Tuesday, Wednesday, and Thursday. You can just follow along and take the trades that some masters of Warp take. They're not the same type of trades that I take, but they have shown quite a success rate. Otherwise, they wouldn't be having that trading room. So, or you can just go to checkout without the trading room, and then scroll down and hit the X, and then throw in your Warp off promo code, apply, and then that gets your price down to under 2,000 bucks, one-time payment. Sometimes I think they should charge more for this. I remember when I bought it, I bought it as like a Christmas present to myself. I was like, either I buy this or I'm just gonna have to quit trading again. So I had already quit trading like twice, once for like 4 months and once for 2 months and once for 6 months or something. But I haven't quit trading since I've bought TachEon TimeWarp. So that's pretty cool. So another thing that Back to the Future just came out with was this financing. So you can add that to cart, and then who knows, you'll probably get approved by Sezzle, and you can just get it and make monthly payments, which is awesome. Talk to Dave. Dave is the sales master guy. Dave, are you even here today? I usually talk to Dave for a little bit before we start. Is he here? Anyway, Dave's, oh, there he is. Nice, sweet. Did you post your number in the chat, Dave? Yes, he did. Here's his number. You can call Dave, and you never know. He might be able to sweeten the deal even sweeter than the Warp Off discount code. Maybe there's other things. I don't know. There might be specials, holidays, something. I have no idea. But the only way you can find out, or maybe I don't know, who knows, throw in a free mentorship session with myself, who knows. Give Dave a call though, and that's how you can find out. 727-742-2626. Whoa, David said early Black Friday prices. I've never seen that before. That seems even better than the Halloween special. Early Black Friday prices. All right, well, now could be the time. So give Dave a call. His email, if you want to email him instead, is david@backtothefuturetrading.com. And What else? Oh, I need to show you this final slide. Oh, that's way down. Yeah, no. So yeah, don't forget 95% of retail traders use retail trading equipment. Not professional institutional grade software, which is what I consider TimeWarp. So yeah, with the purchase, you get 2 lifetime licenses for 2 separate computers, 2 totally separate machine IDs. If you know what I mean, you can utilize those 2 lifetime licenses and free lifetime updates, free white glove installation. If you're worried about, oh, I don't know how to set it up, and don't worry, we can help. Literally take the mouse control for you and get it set up for you. Free video archive training, of course. You got all these YouTube videos. I mean, it's everything you need. Multiple different systems that you can choose from, plus the software, obviously. And there's your promo code, and then there's your purchase today. And then if you want a personalized advanced training, or I don't know, if you want a mentorship session with me, I'm not going to try to sell myself, but I just put that on there. If you want to do anything, then give me a call. This webinar is beginning to round the corner in which I'm getting tired of talking. And I think it is time. Unless anybody has questions, I'll take like a few more minutes. Let me just see what we got going on here. No, Richard, yes, that's a really good question. I'm glad you asked. Richard asked, are you now taking these trades before the HMA changes color? No, I still want the HMA to change color and close. So this 321 signal here, our HMA is white. So when you're back testing this, you have to use, so I just use that extra margin over here on the side to make that, it's like a 400 or something. So when you're back testing, make sure that the candle that you back test or that you enter on has closed the HMA blue, right? So here, that's where you would enter, or that's where I would enter on this candle. No mind to the open price line, but our HMA is blue and our ATR stop is indeed in the appropriate direction. And then we hit target 1 here. And then we move our stops to break even. So we have 2 break even trades. Does that make sense, Richard? Yeah, you can't really back test this system with Aurora, Yusuf. Aurora doesn't have the capabilities of, putting your own indicator in there and the take profit 1 and 2. So you got to do it by hand. I have to do it by hand. Aurora can be really good for other strategies like a dot to dot or like dot to dot or patterns, punch throughs with EMAs, determining what the best signals are for any instrument, time frame, stuff like that. But as far as testing I'm not going to say this is a complicated strategy, but as far as testing a strategy like this, Aurora doesn't have that capability. But you could program it possibly in a strategy if you had the right programmer. But even then, it's going to take some time and some dollar bills to get that code going. But it can be done. I'm fairly certain it can be done. Richard, have you? Oh, you asked another question. Okay, have you ever looked at taking puncture trades as the price crosses the price line? What price line? The open price line? Oh yeah, that's how I was doing like the last multiple webinars. Well, not the last 3, but there was like 4 weeks in a row where I was using the open price line punctures. But I wanted some alternative methods. It was almost it was getting boring to me, so I wanted to try something else. Yeah, it does. I mean, it works on the NASDAQ 3-minute, and I mean, no, weren't we testing the 1 minute? I know we were testing the 3 minute. There was like multiple weeks in a row we're using the open price line. But here's an example where like I don't really like. Well, it does actually work here on this little tiny candle. So like here's a close above the open price line. And you could enter here at the close here. And then drag your stop to the wick. That's just what I was doing before. I would need the HMA to be white, close above, and then target 1, target 2, stop break even. Or you could, you could use, open price line, close above, and then you could drag your stop all the way to the ATR, hit your target 1 there. But if we would have entered on, say this candle here, this one did not close above, like maybe we missed it because it's right on the line. And then this looks like a great candle to enter on. Or no, if this would be the candle to enter on, had this one not closed above. I just got sick of seeing this happen. Sick and tired of it. I mean, overall, over time, yeah, the strategy it's profitable, but emotionally, I just couldn't deal with it anymore. I couldn't deal with like these fast moving candles. Let me see if I can find an example. But there's also, there's nothing wrong with waiting for 1 candle, or sometimes you have to wait for 2 depending on if you're using patterns or not. Oh, here we go. Here's one. So instead of taking the trade as we just described in today's webinar, we would be waiting for a candle to close above the open price line. This is like what I was teaching before, which still, I mean, it does work. And then we come and get stopped out. But how we entered, and I've been noticing this, how we entered right at the close of the dot candle and drag our stop. Oh, either way we don't get, we get stopped out here. But at least with the ATR, we don't, well, I guess it ends up probably be, it's still less of a loss, 14 versus 22. Yeah, I mean, there's just more. That's why I kind of started the webinar out with like, there's more than one way to skin a cat. Oh, here's a good example. I just felt like I was late a lot. So here it's this 1141, waiting for a close above the open price line. Bam, there it is. Enter, stop goes to the wick of the candle. Target 1, target 2. So this one works either way. So what I was teaching today was not worried about the open price line. Stop goes to the ATR stop, white HMA, target 1, target 2. So, I mean, it would be awesome to have a plethora of data to see which method is better, but I'm not going to sit here and spend the next multiple days and hours. I just can't do it. It'd be sweet if somebody wanted to do that for me, though. That'd be great. Let me know. Let me know which one works better over like 1,000 trades. Everybody's good? Richard, does that answer your question? More or less? Kind of, sort of. And then I'm going to get you all out here. Yes. All right, sweet. All questions answered. Everybody's doing well. Tomorrow is Friday. Happy trading. Oh, look, market started doing things again. Or maybe my data. Oh, yeah, there it goes. Somebody's doing something. All right. Well, it was a pleasure being with you all. And I'll end the webinar with what I usually end the webinar with, which is the Bob Ross modified quote. You're welcome, Luke. Thank you. All right, sweet. Well, thanks for that end comment there, Luke. Thank you for thanking us. Thank you, Jason. Thank you for thanking. And then again, yeah, like just to reiterate, this was all without patterns. This is just blue dot, white dot. Blue dot, white dot. And what I noticed with the open price line method is that it did work better with patterns. Yeah, I don't know. I still don't have the quantitative data. I'm just guessing. So if anybody wants to spend the hours, let me know which method works better. But from what I've seen, they all work because they start with the premise of these beautiful white and blue dots that are based on historical, quantitative, algorithmic data, historically searched and scanned by TachEon TimeWarp's 12,000 plus lines of code. And just remember, there are no mistakes in trading, only happy accidents. Over and out. Have a good one, everybody. We'll see you next week.